Hi, I'm Ahya Isha, and today we're talking about how to become a strategic property investor, and we're in our second mindset, which is understanding the game. Now, a very important thing to understand before moving into deeper things in property investment is that you have a lot of choices for investment vehicles. I'm not imposing on you to immediately love and want to do property investment. What you need to do as a strategic investor is to assess all the different kinds of property, all the different kinds of investment vehicles. So, you've got, you can put your money in unit trusts, in fixed deposits, in equity like stocks, in property, or invest in gold. So there's a lot of investment vehicles that you can put your money into to get returns in. So you have to understand that every investment vehicle has the good and the bad. And the interesting thing is that no investment vehicle is actually perfect. You are never going to find anything perfect. You're just going to have to live with the good and the bad of the investment vehicle. And a lot of times, I always like to pit these two together, property investment and stock investing. So you've got these two very popular investment vehicles that a lot of people invest in, and this is property, stocks. So I'm just going to be quite simplistic in explaining to you the good and the bad of property against the good and the bad of stocks to demonstrate how no investment vehicle is actually perfect, and that you have to live with the bad of this investment. Now, the good of stocks is, what's good about it? The returns are good, liquid, it's very liquid, and stocks, one thing bad about it is it fluctuates, it's very volatile, and certainly it can go down to zero, right? It could actually crash, the stocks can crash and it goes down to the value of zero. Now, when you talk about property, the good of property is what is it? Number one, of course, you can leverage. You don't actually have to use your money, and I would think that it's a very stable and time-proven sort of investment, an asset that is very stable, and you can expect it to grow as long as population grows and there's a need for residential and business premises, and it's quite stable. But the bad of it is definitely leverage itself. Leverage itself is a double-edged sword, and with property is that it's not liquid. I just want to highlight to you, a lot of people, the importance of this. Okay? You can't avoid the fact that property investment is something not liquid. What it means is, when you put your money in property, if you need to cash out and if you need the money desperately, you will not get that money instantly. Like in the stock market, like in other investment vehicles, you can cash out almost immediately, right? Almost immediately, maybe give 1-2 days or a few days. But in property investment in Malaysia, it's totally not liquid, and it's scary, and it's a scary fact of this being not liquid. A typical transaction to dispose a property could take about 3 to 4 months. So let's say right now it's January and you're in need of some money because of some emergencies, or you're in desperate need for that money for whatever reason. If it's in January, most likely you're only going to get that money in March or April, even if you're lucky, because sometimes it might even drag. So this is an important fact to look at. Although property investment is superb to me, because you can leverage, you can use the bank's money to invest in property, and because it's stable, it's a stable growth to your money. And in some instances, when you choose the right locations, the growth is actually immense. It's wonderful. It's crazy growth, like 20-30% per year on your capital appreciation. Although it's really great, the strategic property investor needs to understand that property investment is not a perfect investment vehicle. that it has some bad things about it, some negative points about it. But it's okay, no investment vehicle is perfect. We're just going to live with it. We understand the good and the bad so that we become more strategic about our investment decisions. So ladies and gentlemen, thank you so much for watching. Stay tuned for more on the next videos. Bye-bye.